Question 1. General insurance concepts. Which of the following is a primary characteristic of a contract of adhesion in the context of insurance? A. The contract terms are negotiated by both parties. B. The insurer drafts the contract and the insured has little or no ability to alter its terms. C. The contract is subject to arbitration in case of disputes. D. The insured has the right to cancel the contract at any time with a full refund. Answer: B. The insurer drafts the contract and the insured has little or no ability to alter its terms. Explanation: a contract of adhesion is a type of contract commonly seen in insurance policies where the insurer drafts the terms and the insured must accept the contract as written, with little or no ability to modify its terms. This is distinct from other contract types where both parties have the ability to negotiate terms. In the event of ambiguity, the courts typically interpret such contracts in favor of the insured due to the unequal bargaining power. This principle is defined under general insurance law and is part of the legal concept of contracts of adhesion, which is essential for understanding how insurance contracts are constructed and enforced. Question 2. Insurance licensing and continuing education. Which of the following best describes the Vermont requirements for continuing education for an insurance producer to maintain their license? A. A producer is required to complete 12 hours of continuing education every 2 years, including at least 4 hours related to ethics. B. A producer is required to complete 24 hours of continuing education every year, with no specific ethics requirement. C. A producer is required to complete 16 hours of continuing education every 3 years, with no specific focus on ethics. D. A producer is required to complete 8 hours of continuing education every year, including at least 4 hours related to Vermont state law. Answer: A. A producer is required to complete 12 hours of continuing education every 2 years, including at least 4 hours related to ethics. Explanation: Vermont mandates that licensed insurance producers complete 12 hours of continuing education every 2 years. At these 12 hours, at least 4 hours must be specifically dedicated to ethics. This ensures that producers remain updated on relevant changes to state laws, industry standards, and ethical practices. Vermont's Department of Financial Regulation, DFR, oversees this requirement to ensure that insurance producers maintain their knowledge and uphold professional ethical standards. Question 3. Scenario-based question on insurance policy provisions. Mr. Jacobs is a 35-year-old individual who purchases a whole life insurance policy. His policy includes a provision that allows him to borrow against the cash value of the policy. 1 year into the policy, Mr. Jacobs borrows $5,000 against the cash value of his policy. 6 months later, he decides to pay back only $2,000 of the loan. What should Mr. Jacobs understand about the effect of this partial repayment on his policy? A. The loan will be fully forgiven and no further action is required. B. The outstanding loan amount will accrue interest and failure to repay it could reduce the death benefit. C. The outstanding loan will not affect the policy as long as the loan balance is less than 10% of the face value. D. The partial repayment will automatically reinstate the full cash value of the policy. Answer: B. The outstanding loan amount will accrue interest and failure to repay could reduce the death benefit. Explanation: whole life insurance policies typically allow policyholders to take loans against the accumulated cash value. However, it's important for the policyholder to understand that any outstanding loan balance, along with interest, will be subtracted from the death benefit if not repaid. In Mr. Jacobs' case, even though he repaid part of the loan, the remaining $3,000 loan balance will continue to accrue interest. If Mr. Jacobs does not repay the full loan balance, the death benefit will be reduced by the total loan balance, including any accrued interest. This is a crucial concept in insurance contracts, as policyholders must be mindful of how loans affect their policies over time. Question 4. Types of insurance products. Which of the following statements best explains the difference between a health maintenance organization, HMO, and a preferred provider organization, PPO? HMO allows members to see any specialist without a referral, while a PO requires a referral for specialist care. B. A PO typically offers more flexibility in choosing healthcare providers, while HMO generally requires members to choose a primary care physician and get referrals. C. An HMO offers more flexibility in choosing healthcare providers compared to a POD. But HMO and PPO plans require members to stay within a network of healthcare providers with no exceptions. Answer: B. A PO typically offers more flexibility in choosing healthcare providers, while HMO generally requires members to choose a primary care physician and get referrals. Explanation: health maintenance organizations HMOS typically require members to choose a primary care physician (PCP) and obtain referrals before seeing specialists. This limits flexibility but often results in lower premiums. In contrast, preferred provider organizations (POS) offer more flexibility, allowing members to see specialists without needing a referral and permitting care outside of the network. Although at a higher cost, these differences are key in determining which plan is more suitable for different healthcare needs. Question 5. Insurance regulation in Vermont. Which of the following is considered a prohibited practice under Vermont insurance regulations? A. A producer offering a discounted premium in exchange for a referral. B. A producer providing the insured with a full and fair explanation of policy exclusions. C. A producer recommending a policy based solely on the financial needs of the insured. D. A producer advertising the terms of a policy truthfully and accurately. Answer A. A producer offering a discounted premium in exchange for a referral. Explanation. Under Vermont insurance regulations, offering discounts or incentives in exchange for referrals can be considered an illegal practice, as it may lead to conflicts of interest or misrepresentation. The law mandates that producers act in the best interest of the policyholder and avoid any practices that could result in unfair advantages or mislead clients. Other practices like providing full policy explanations or recommending products based on the insured's needs are compliant with the regulatory framework. Question 6. Insurance underwriting and risk selection. Which of the following factors is least likely to affect an insurance applicant's underwriting classification? A. The applicant's occupation. B. The applicant's lifestyle habits, such as smoking. C. The applicant's medical history. D. The applicant's social security number. Answer D. The applicant's social security number. Explanation. Underwriting focuses on evaluating the risk posed by an applicant. Factors such as occupation, lifestyle habits, and medical history are critical in assessing risk, as they influence the likelihood of a claim being made. A social security number is not a risk factor itself, but rather it serves as an identifier. Underwriters use personal and health-related factors to classify applicants into different risk categories, e.g. preferred, standard, substandard, which determines the premium rates. Question 7. Property insurance. Which of the following is an example of replacement cost under property insurance policy? A. The actual cash value of the property at the time of the loss. B. The original cost of the property when it was purchased. C. The cost to repair or replace damaged property with new, similar materials without deduction for depreciation. D. The cost to replace damaged property using the market value at the time of loss. Answer C. The cost to repair or replace damaged property with new, similar materials without deduction for depreciation. Explanation. Replacement cost is the amount it would take to replace or repair the property without considering depreciation. This ensures that the insured is compensated for the full cost of replacing the damaged or lost property with similar quality materials, providing a more comprehensive coverage than actual cash value (SEV), which deducts depreciation from the settlement. Question 8. Casualty insurance. Which of the following is an example of professional liability insurance? A. A policy covering damage caused by a contractor during home construction. B. A policy covering a dentist for claims related to malpractice. C. A policy covering bodily injury caused by an auto accident. D. A policy covering the destruction of property in a fire. Answer B. A policy covering a dentist for claims related to malpractice. Explanation. Professional liability insurance, also known as errors and omissions (EO) insurance, is designed to protect professionals, such as doctors, lawyers, and dentists, from claims of negligence, malpractice, or failure to perform their professional duties. It is distinct from general liability insurance, which covers bodily injury and property damage, or commercial insurance, which covers business-related incidents. Question 9. Claims settlement process. Which of the following is true regarding the claims settlement process in insurance? A. Once a claim is filed, insurers must deny the claim within 30 days. B. Insurers must notify the claimant of a decision regarding the claim within 90 days of receiving all necessary information. C. Claims adjusters are not allowed to negotiate with claimants. D. Insurers can deny claims without any investigation if the claim seems suspicious. Answer B. Insurers must notify the claimant of a decision regarding the claim within 90 days of receiving all necessary information. Explanation. Insurance companies are required to notify claimants of their decision within a reasonable time frame. In Vermont, insurers must provide a response within 90 days of receiving all necessary information for a claim. This rule is designed to ensure that claims are processed in a timely and fair manner. Failing to do so could result in penalties or fines for the insurer. Claims adjusters are involved in negotiating settlements but are obligated to act in good faith. Question 10. Life insurance. Which of the following statements is true regarding the incontestability clause in a life insurance policy? A. The insurer can contest the policy after 2 years if the insured's death was caused by suicide. B. The insurer cannot contest the policy after 2 years except in cases of fraud or misrepresentation. C. The insurer can contest the policy anytime during the term of the policy. D. The incontestability clause is applicable only to term life insurance policies. Answer: B. The insurer cannot contest the policy after 2 years except in cases of fraud or misrepresentation. Explanation: the incontestability clause in life insurance policies limits the time during which the insurer can dispute a claim. Typically, this period is 2 years from the policy's issuance. After this period, the insurer cannot contest the policy except in cases where there is evidence of fraud or material misrepresentation. This clause is designed to provide the insured with sense of security that their coverage will not be revoked after a significant period. Question 11. Insurance sales practices. Which of the following best describes the primary objective of a needs analysis in insurance sales? A. To determine the insured's eligibility for various discounts and premiums. B. To analyze the insured's financial goals and recommend appropriate insurance products. C. To evaluate the insurer's market share and recommend the most popular policies. D. To assess the insured's risk tolerance and offer the least expensive policy. Answer: B. To analyze the insured's financial goals and recommend appropriate insurance products. Explanation: a needs analysis is an essential process in insurance sales, focusing on understanding the client's financial needs and goals. This analysis helps identify the most appropriate types and amounts of insurance coverage, ensuring the insured receives adequate protection based on their unique situation. It is not focused on discounts, market share, or simply offering the cheapest policy, but rather providing tailored solution that best suits the client's needs. Question 12. Insurance policy exclusions. Which of the following is most commonly excluded from a standard homeowner's insurance policy? A. Theft of personal property. B. Damage caused by tree falling on the home. C. Flood damage caused by a hurricane. D. Fire damage to the structure of the home. Answer: C. Flood damage caused by a hurricane. Explanation: standard homeowners insurance policies typically exclude flood damage, including damage caused by hurricanes. Flood coverage often requires separate flood insurance policy, typically provided through the National Flood Insurance Program and FIP. Other types of damage, such as theft, falling trees, and fire, are typically covered under standard policies subject to terms and conditions. Question 13. Auto insurance coverage. Which of the following is a feature of comprehensive auto insurance coverage? A. It covers damage to the insured's car resulting from collision. B. It covers damage to the insured's car caused by weather events or vandalism. C. It covers bodily injury caused to others in an accident. D. It covers damage to another person's car in an accident caused by the insured. Answer: B. It covers damage to the insured's car caused by weather events or vandalism. Explanation: comprehensive auto insurance coverage provides protection against damage to the insured's vehicle that is not the result of collision, such as damage caused by weather, vandalism, theft, or hitting an animal. This is different from collision coverage, which covers damage to the insured's vehicle resulting from crash with another vehicle or object. Question 14. Liability insurance. Which of the following is covered under a general liability insurance policy for a business? A. Property damage caused by an employee's negligence during work hours. B. Loss of profits due to business interruption. C. Medical expenses for employees injured on the job. D. Damage to the business owner's personal property. Answer: A. Property damage caused by an employee's negligence during work hours. Explanation: general liability insurance for businesses typically covers claims of bodily injury, property damage, and personal injury caused by the business's operations or employees during work. It does not cover employee injuries, which are typically covered under workers' compensation insurance. It also doesn't cover losses due to business interruption or damage to the owner's personal property. Question 15. Workers' compensation. Which of the following is true about workers' compensation insurance? A. It covers medical expenses for employees injured off the job. B. It provides income replacement for employees who are temporarily unable to work due to injury. C. It allows employees to sue the employer for workplace injuries. D. It is not required by law for businesses to provide workers' compensation insurance. Answer: B. It provides income replacement for employees who are temporarily unable to work due to injury. Explanation: workers' compensation insurance is designed to provide medical benefits and income replacement for employees who are injured on the job. It also helps employees return to work more quickly after an injury. Typically, workers' compensation insurance eliminates the right of employees to sue their employer for workplace injuries, as the system provides no-fault benefits to both parties. Question 16. Health insurance plans. Which of the following is a key feature of a high-deductible health HHPA? Low premiums with higher out-of-pocket costs when care is needed. B. Low premiums and low out-of-pocket costs for medical services. C. No deductible for preventive care services. D. Coverage for non-essential health services like cosmetic surgery. Answer A. Low premiums with higher out-of-pocket costs when care is needed. Explanation: a high-deductible health AHP is characterized by low monthly premiums and higher deductibles, meaning that the insured will pay more out-of-pocket for healthcare services before the insurance coverage kicks in. These plans are often paired with health savings accounts (HSAs) to help cover the high-deductible costs. They tend to be attractive to individuals who do not anticipate needing frequent medical care. Question 17. Insurance fraud. Which of the following constitutes insurance fraud? A. Filing a claim for damages that were incurred under an existing insurance policy. B. Exaggerating the value of a claim to receive a higher payout than the actual loss. C. Delaying a claim to allow for additional damages to occur. D. Requesting compensation for a covered loss under a valid insurance policy. Answer: B. Exaggerating the value of a claim to receive a higher payout than the actual loss. Explanation: insurance fraud involves intentionally misrepresenting or exaggerating information to receive a higher payout or benefits than one is entitled to. This could include inflating the value of a claim or fabricating damages. Such practices are illegal and can result in penalties, fines, and legal action. Filing a legitimate claim for a covered loss is not fraud, nor is delaying a claim with the intention of adding additional damages, as long as the delay is not meant to deceive the insurer. Question 18. Long-term care insurance. Which of the following is typically covered by a long-term care insurance policy? A. Routine medical checkups and doctor visits. B. Custodial care for individuals who need assistance with daily living activities. C. Prescription medications required for short-term illnesses. D. Emergency medical care for sudden accidents or illnesses. Answer: B. Custodial care for individuals who need assistance with daily living activities. Explanation: long-term care insurance is designed to cover services that assist individuals who can no longer perform basic daily activities such as bathing, dressing, or eating due to illness, disability, or aging. It does not typically cover routine medical services or emergency care. Coverage can include in-home care, nursing home care, or assisted living facilities, but not general medical treatments like checkups or prescriptions. Question 19. Umbrella insurance. What is the primary purpose of umbrella insurance? A. To cover the medical expenses for individuals injured in an accident. B. To provide additional liability coverage beyond the limits of existing policies, such as auto or homeowners insurance. C. To cover the loss of income due to an injury or illness. D. To provide coverage for medical conditions not included in a standard health insurance plan. Answer: B. To provide additional liability coverage beyond the limits of existing policies, such as auto or homeowners insurance. Explanation: umbrella insurance is a type of liability insurance that provides additional coverage beyond the limits of other personal insurance policies, such as homeowners, auto, or boat insurance. It helps protect against large claims or lawsuits that exceed the liability coverage of the primary policy. This is especially useful for individuals with substantial assets, as it can cover legal defense costs and claims for which they might otherwise be financially responsible. Question 20. Insurance premium calculation. Which of the following factors is typically considered when calculating an insurance premium? A. The insured's favorite activities and hobbies. B. The insured's personal credit score in some cases. C. The number of policies an individual has with the insurer. D. The insured's ability to pay premiums monthly or annually. Answer: B. The insured's personal credit score in some cases. Explanation: insurance companies may use a variety of factors to calculate premiums, including the insured's credit score, which can be a predictor of the likelihood of filing claim or paying premiums on time. Other factors include the type and level of coverage, the insured's claims history, location, and specific risks associated with the insured's circumstances. Some insurers may also offer discounts for bundling multiple policies or paying premiums annually rather than monthly. Question 21. Insurance company regulation. Which of the following is true about the role of state insurance commissioners? A. They are responsible for setting premium rates for all types of insurance policies. B. They enforce insurance laws, regulate insurance companies, and protect consumers. C. They approve or deny claims on behalf of insurers. D. They create insurance policies that all companies must follow. Answer: B. They enforce insurance laws, regulate insurance companies, and protect consumers. Explanation: state insurance commissioners are responsible for regulating the insurance industry within their state. They ensure that insurance companies operate in a fair and legal manner, protect consumers from unethical practices, and ensure companies maintain sufficient reserves to pay claims. They do not set premium rates, though they may approve them in some states, and they do not directly approve or deny individual claims. Question 22. Renters insurance. Which of the following is typically covered under a standard renter's insurance policy? A. The structure of the rented building. B. Personal property damage from a flood. C. Personal property damage caused by a fire. D. Property damage to the landlord's property. Answer: C. Personal property damage caused by a fire. Explanation: the standard renter's insurance policy covers personal property for damages caused by incidents such as fire, theft, vandalism, or other covered risks. It does not cover the structure of the rented building, which is the landlord's responsibility, or flood damage unless separate flood insurance policy is purchased. Renter's insurance also provides liability coverage in case someone is injured in the rented space. Question 23. Health insurance networks. Which of the following is a characteristic of a health maintenance organization? HMO plan. A. It offers the flexibility to see any doctor without a referral. B. It generally has a smaller network of healthcare providers. C. It does not require members to choose a primary care physician PCP. D. It offers out-of-network coverage without any additional charges. Answer: B. It generally has a smaller network of healthcare providers. Explanation: an HMO plan typically requires members to choose a primary care physician PCP and obtain referrals from the PCP to see specialists. HMOs tend to have a smaller network of healthcare providers, and usually they do not cover out-of-network care except in emergencies. This restriction helps keep premiums lower but limits access to providers compared to other types of health insurance plans. Question 24. Insurance underwriting. Which of the following is a factor that an insurer typically considers when underwriting an auto insurance policy? A. The insured's educational level. B. The make, model, and age of the vehicle being insured. C. The insured's marital status. D. The insured's personal hobbies and interests. Answer: B. The make, model, and age of the vehicle being insured. Explanation: when underwriting an auto insurance policy, insurers assess the type of car being insured, make, model, and age, because these factors affect the cost of repairs, likelihood of theft, and potential for accidents. Other factors that may influence underwriting include driving history, location, and age of the driver. Insurers generally do not consider personal hobbies or educational levels when underwriting auto policies. Question 25. Homeowners insurance coverage. Which of the following is typically covered under a standard homeowners insurance policy? A. Damage from a volcanic eruption. B. Damage from a flooding event. C. Damage caused by termites. D. Damage to personal property due to a fire. Answer: D. Damage to personal property due to a fire. Explanation: a standard homeowners insurance policy covers damage to the home and personal property caused by risks such as fire, theft, or vandalism. However, damage caused by flooding or specific pest damage, e.g. termites, is typically excluded unless separate coverage is added. Volcanic eruptions may be covered in some instances, but this would depend on the specific policy. Question 26. Life insurance beneficiaries. In a life insurance policy, which of the following statements about the beneficiary is true? A. The beneficiary can be a minor, but only with special arrangements. B. A life insurance policy automatically designates a beneficiary based on the policyholder's family relationships. C. A beneficiary has to be a direct family member of the policyholder. D. A beneficiary is responsible for paying the policyholder's premiums after their death. Answer A. The beneficiary can be a minor, but only with special arrangements. Explanation. A beneficiary in a life insurance policy can be any person or entity the policyholder chooses, including a minor, though special arrangements are needed to manage the funds for a minor's benefit, such as setting up a trust. The policyholder has the flexibility to designate anyone, not just family members, as the beneficiary. The beneficiary does not have to pay premiums after the policyholder's death. The premiums are paid while the policyholder is alive. Question 27. Health Savings Accounts HSAS. Which of the following is true about health savings accounts HSAS? A. HSA funds are taxable when withdrawn for qualified medical expenses. B. HSA funds can be used for any expenses without penalties or taxes. C. HSAS are available only to individuals with high deductible health initiations. D. Contributions to an HSA are not tax deductible. Answer C. HSAs are available only to individuals with high deductible health initiations. Explanation. Health savings accounts HSAs are specifically designed for individuals with high deductible health plan initiations. Contributions to an HSA are tax deductible and withdrawals for qualified medical expenses are tax-free. However, withdrawals for non-medical expenses are subject to taxes and penalties. HSAs offer a tax-advantaged way to save for medical expenses while being paired with a high deductible plan. Question 20. Auto insurance coverage types. Which of the following is typically covered by collision auto insurance? A. Damage caused by an uninsured driver. B. Damage to your car from a natural disaster. C. Damage to your car from hitting another vehicle or object. D. Injuries sustained by other drivers in an accident. Answer C. Damage to your car from hitting another vehicle or object. Explanation. Collision insurance covers the cost of repairing or replacing your vehicle if it is damaged in a collision with another vehicle or an object, such as a fence or tree. It does not cover damage caused by weather events or uninsured drivers, which would be covered by comprehensive or uninsured motorist coverage, respectively, or medical expenses. Question 29. Disability insurance. Which of the following is typically covered by short-term disability insurance? A. Long-term injuries that prevent a person from working for over a year. B. Medical treatments for serious conditions such as cancer. C. A loss of income due to a temporary illness or injury. D. Healthcare expenses for non-work related injuries. Answer C. Loss of income due to a temporary illness or injury. Explanation. Short-term disability insurance provides income replacement for employees who are temporarily unable to work due to a short-term illness, injury, or medical condition. It typically covers a portion of the individual's income for a limited period of time, often 3 to 6 months. It does not cover long-term injuries or medical expenses related to health conditions. Those would typically be covered by health insurance. Question 30. Renters insurance liability coverage. Which of the following does renters insurance liability coverage typically protect against? A. Damage to the rental property itself. B. Theft of the renter's personal belongings. C. Legal expenses if the renter is sued for injuring someone on the rental property. D. Damage caused to the renter's own vehicle. Answer C. Legal expenses if the renter is sued for injuring someone on the rental property. Explanation. Liability coverage in a renter's insurance policy protects the renter if they are sued for causing bodily injury or property damage to others. It can also cover legal fees and settlements up to the policy's limits. Renter's insurance generally does not cover the structure of the rental property, thus the landlord's responsibility or damage to the renter's personal vehicle, which would be covered under auto insurance.